take that as a no.
We'll get
Okay,
everyone loosened up eventually.
Yeah, we'll break the ice. Well, I'll start off with my chart here, and if I've made some mistakes, just like someone just chime in and just like and tell me I've got it wrong, or just tell me I've missed something. Don't be worried to like offend me. I'm just kind of starting off on like a higher time frame here, and I try not to have. I do have a setup where I have like more than one chart, but I try not to have too many lines on the chart because I feel, I don't know about you guys, but I feel it gets to a certain point where the more lines you put on, it's kind of counterproductive that my brain just can't process that many lines. So I'm kind of working on this. We've got obviously, as Sin said before, Bitcoin's kind of like teetering on a cliff edge here. But I've kind of got it down to the higher time frame. Like we've kind of got a 2-hour range trend coming down here. Looks like we've rejected on here. A 2-hour range trend here, which has kind of pushed us to a bit of a squeeze. And from what I can see, coming down to like the 12-hour, and this is something I'm still a little bit unsure of, so maybe someone can jump in. I think we've got an origin level here. And the origin is drawn from the wick, which I presume there's another origin level in here. It would make more sense if the origin level was actually on the body, because then all of this would be part of it. But I presume, as I've seen, it's on the wick. That would give us a kind of a good origin level here, which we formed a range of. And then we started to get like a little 12-hour range trend here to push us down. And I can't see any higher time frame hold levels in here. Can anyone see them? Like it looks like on the 12-hour, like here was the last hold, and this one's already been hit. There's nothing left here. This kind of looks like, unless we can make a range trend here, I think that's where it would be. Again, maybe I've got that wrong, that when this candle closes, I presume we form a range trend here. This is the low, then we have the range, and then the low here. So maybe that keeps us up, but...
And would it be correct to draw one from that candle that goes down the farthest as well? Would that be an accurate range trend? Yeah.
Yeah, I think, so maybe this is the bit, maybe someone can, I think that's that one, isn't it? This is the first one that comes into the body.
So it's used up?
I think so.
Okay.
Maybe, I agree, like I'm still a bit confused with those ones because it's so far away from the origin, the pivot.
Mm-hmm.
But I think that's the first one that comes into the body here. Then it looks like we bounced off it here. It gets a bit messy here for me. Yeah, but I think we will make one here, right? If this candle, but we still have 4 hours or so to go. So I guess this could still keep pushing down. Is there something I've missed, guys? Is there something, or maybe something we've gone over that I've gotten wrong, or something that someone isn't sure about, that they want to kind of explore a bit more?
Yeah, I have seen a few posts about range trends, and I think people have various ideas whether to draw them from the bottom side of a distribution candle or accumulation. And so from Sin, please correct me if I'm wrong, or anyone else, but from what I've seen is the common theme seems to be that we draw them from the bottom wick of a distribution candle and the top wick of a accumulation candle. Yeah, so blue candles, bottom wicks, green candles, top wicks. And if a candle hard closes a trend, then we have to move that trend. Sin, in his video from this morning, UTC time, he discusses that a little bit, and he talks about candles that the body opens on the trend and how to manage that. So I think that's also a great resource to point to. I can post the link to that video in the chat. He discusses how to draw them. And it becomes a bit confusing because if you watch Cotton Candy, he discusses cycle trends and range trends and can become very fractal all of a sudden. But yeah, I think you're absolutely right. It's just when do you move it and when do you array them? That's the next question I would be looking to get into.
As I understand it, the range trends don't get arrayed. They stay. Obviously, the normal trends get arrayed, but the range trends stay as they are. I think since they're like a one-time use type thing. I think I may have that wrong. But I think the normal trends can be arrayed, and then the range trends kind of stay there, and then they can get hit backside and front side. I guess they get polarized as they move. Because he said they represent the range trend represents almost like a horizontal level. So I presume in that sense it wouldn't be moved, it wouldn't be arrayed, and then top side and the bottom side could be used for support and resistance as we go up and down.
My other question is for us to call it a range trend, do we need to actually have a range, meaning at least 2 candles in the same direction?
Great question. That's something me and Nate, or at least I'll say for myself, I struggle to understand as well. Sometimes you get a really obvious range with obviously the range is 2 candles of the same color, but sometimes, do I have an example here where I've drawn one that's very questionable? I'm sure there is a very questionable one. The 2-day here has this to this, and you get the two range candles. Maybe the 12-hour here. That one. Yeah, but sometimes I do get confused. Is it like if we had a down candle here, and then we were going to draw our range trend, and then we had one yellow candle, and then another blue candle and a blue candle. I wonder if we could do the range trend like that if these two were blue. That's something maybe we can ask Sin in the group thing later, or if he's around now, he could help us with. Obviously, when it's 2 candles of the same color, it's obvious.
I can recollect at least one direct example from his explanations lately, which is if you go on the monthly chart for Solana, it's just the single one I come up with right from the gut. So if you start from the very left on 2021, from that I candle.
The previous bull market?
Yeah, the previous.
Oh, yeah, I'm with you.
From the peak, if you draw an array from that peak and hit if you would follow all those candles along, you eventually land at the 3rd green candle, which is around May 24. So up, down, up, the next one, the next green.
This one here?
Yeah, this one. So that kind of answers that you don't need 2 candles. You have had 2 consecutive green candles from the kickoff of the whole run up there. Then you had like 1 distribution candle, right? Which almost breaks the accumulation candle, the large one. But then you have a single accumulation candle again. And that's at least how he has drawn it before eventually then going higher. But yeah, maybe I'm mistaken here and he could clarify on this, but at least that's what I recollected. So.
That's really interesting. You see, I would have drawn it to there, so I've obviously been getting it wrong.
It's not because, that can I explain easily, because if you follow along all the candles, you eventually land at the one in February 2024, which is the smaller one right before the 2 large ones. And yeah, if you just do it, then you will see what I will explain. You see that the next candle is on top of the trend line, and you don't do that. You want hard opens and hard closes for selecting the next candles. And as you can see, the big large candle overlaps that one, so you don't pick this, but the next one. the next green candle because it's hard open outside of this downtrend.
And so the hard close rule for trend lines applies for range trends as well.
Not quite.
That's where I was saying he should chime in if I'm mistaken there.
Do you want me to
okay.
do you want me to share my screen and just show you?
Yeah.
Okay.
I've been getting that really wrong there.
Because I feel like I'm also hunting range trend and trend sometimes, so would be good to get on top of the topic.
Okay. Can everyone see that one?
Loading. Yes.
Yep.
Okay. So there's two conditions in which you can make a range trend. One of them is just when you get a candle either side of a range, or either side of a range. So a range being two candles like that. That becomes a range trend. Yeah. The other condition in which you can create a range trend is when you have a hold level left behind inside of a range and it gets revisited later, and the candle that revisits it closes in the same state as the whole candle. So that becomes a range trend. So this hold level that was left here, never touched, bear marker, bull marker, yada, yada, gets hit here. This is actually the range trend that's stopping us from breaking out of all-time high now. And we were so close to closing the month over the top of that. Well, we may still do it in the next 3 hours, but so then say this one, same scenario, hold level, never touched on the monthly. First candle that closes inside of it is this one. That doesn't get into it. That does.
Sorry, Sin. Just a second. Can you turn on the indicator for thickening the wicks? Because candles don't have wicks.
Fat wick indicator. Okay, here it comes.
Thank you.
Now my OCD is going to kick in. I better just fix this, right? That's enough. Hey, there you go. Big wicks. So I'll start that again. I'll show you a normal trend. See, normal trend starts there, goes there. And this candle closes outside of it. And so what happens with price is that if you break a trend, so a normal trend, you break it by a hard close, the price is then going to target some kind of horizontal resistance, which is the backside of the range here. So backside of that range, break level, break of downtrend, price shoots up, hits the break of the range, and then drops down. So that's a trade, right? This thing closes, you open a swing trade, you TP up here, job done. The trend moves to there because that was a hard close. And you're not going to get another hard close until you get this one down here. And from the moment that this hard close actually happened, the price went into accumulation to basically come back to that level. So all of this was just buying opportunity. You're at least going to come back to here. That was just a given after you did that. And of course that moves to there. Then you got another body not touching, another body not touching, another body not touching, another body not touching, and so on. It only changes when you get here, because when you get here, this one's on the line. So now we're skipping that and we're going all the way to there. This one's on the line, so we're skipping it and we're going to here. And this is where range trends differ. Okay, so that was our normal trend at one point, and we got above it, we retested it, we shot off to the moon, we lost it, we tested it from the underside, we dumped. Right, so that's your normal trend. That trend has now moved to there. So that's positive, because you can go up and hit that. Now, when you were back here, you don't use this candle because it's on the trend. But there is something about this candle, and that's the fact that it closed as an accumulation candle into a hold level that was left here. So it actually creates a range trend, which is not going to move, just stays across there, never changes, never gets arrayed, and it represents this as a horizontal level. So there's two ways you know you're going to break this level. One of them is that if you hard close this trend, which could be down here at $75 one day, if this just keeps going down, and this is how big breakouts happen on shitcoins, they just keep going down, 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 and then they break it over here, and then the next thing you know, you're up here. So that's how range trends differ. They're always in play. We've never managed to break this one yet. It's given it a good shot a few times, but haven't got there. Normal trend is going to skip to that, and then it's going to skip to that. So if this is the top of the range, well then that hold level down there, because range trends basically can start from the top of any hold candle. So that one there, because that was a leftover hold level, that closed an accumulation into it, that creates that range trend. And as you can see, we lived in that range, for quite some time. Still live in that range, really. So that will keep going until, all the way out here, when one day it would just have to either break down or explode out, unless it gets over the top of it or underneath it at some point. So range trends can be created that way. They can be created by blue closes into, say, a blue candle, like on the bottom side, which we don't have there. And the other way a range trend can be created is simply if there is, like in this instance here, these 4 candles, if there is a distribution candle and a distribution candle that occupy the same price range with an accumulation range in between them, that becomes a trend. Okay? And if that trend gets touched, it'll target a horizontal level or another range trend, because a range trend basically is a representation of a horizontal level. So, and you can sort of see how those have, let's pick a time frame. What's one that I can remember? 3 week. Let's try 3 week. So this is a range trend. You've got a 3 week candle closing into a 3 week leftover hold there. And then you've got a break level up there, which is going to be a horizontal target. It created another range trend. That's a range trend, yellow candle, blue distribution range, yellow candle. Those 2 candles occupy the same space. Okay. That's one through there, which is kind of what we're pulling back underneath now. Blue candle, distribution range occupying the same space. So these are all range trends. So that's sort of your flag, or whatever you want to call it, that you're stuck in. And if we look at that on a lower time frame,
Tim, can we just go just on the left side of that thing there? Is there also there is also a range trend going from the left side of that double top over to the right side?
Up here somewhere. These 2.
So the start of that move at the bottom.
Yeah.
On the left, on the other side. Yeah, that candle there going across to the all the way across there to the.
There's a few in here. There's that one. There's that one. There's that one. It's quite a few. And if you put every one of these on your charts, there'd be a lot of lines.
Distribution candles there, the bottom distribution candle, bottom of that move. Does that go across, all the way across to the other side?
Like if you look at the candle that comes all the way down the tallest distribution candle.
These ones.
And does that one at the bottom of the one where your cursor just was, does it match something on the left?
No, it didn't close into any. See, these are all yellow into blue. This is singular candle it's already tested. This has already got a yellow into it, so it's been tested. So, nah. I mean, there's a normal trend. There's a normal trend that'll be running from down here somewhere. And there's also a range trend that's running from down here somewhere. There you go. So, this range trend probably got created because of something down here, I'd say. Like if you just ran a normal trend like this, there to there to there. See that? They almost run in parallel. So, what we saw after this created a range trend, look at that on the lower time frame. So, I think that one, we haven't actually used that one yet. That one just missed. It might be the 4 week. Is it the 4 week? Yeah, it's that one. So we created that.
Can I just clarify then? Blue
Yeah.
candle that we just looked at. As that yellow candle wicks into it and has tested it, even though it's not another blue candle, wick into that cold level. I mean, that's obviously tested now. That candle can't make any range turn now. It's already
No, so it's a left behind hold level or a block of 4. So if it's got a wick going into it, it hasn't been left behind.
Yeah, perfect.
Yeah, so that one couldn't create one. That one couldn't create one. Nothing really over there could create one. So on this time frame, the only one that, like, you've got this one under here, that can create one. That can, so it's not on this time frame, but that move there, if you found it on a lower time frame with that re-entering whatever was in there, could do it. This. So that was sort of that ultimate point of breakout when it kind of got over those. You got that. Well, so, I mean, if we ever come back down to these things, you'll see those bounce. But, so this is, so that block of 4 created that 4 week. And the 4 week was obviously slightly higher up than the 3 week. So as you can see, we created it here. Oh, that doesn't have the, how come the wicks aren't big on that one? Yeah. Can you see those wicks?
Some of them, yeah. Not all of them, no.
Isn't that often I get? Maybe it only works on the first screen. Okay, I'll just make that really big. So we created that range trend. We tested it there, and then after testing it, it went up. Created a hold level, bounced off the hold level, and that was basically the end of that move. There probably was some other trend that it was aiming for. Got over it. So what you're sort of looking for is you want to see range trends get created and candles close above them. If they close too close to them, they can just open on the other side, reject off the back and drop. So, that's a great example. As far as where you would TP, because that one got created with a hold level, you would look to TP or take your first TP at the hold level just to be safe, which was so you had creation on the blue line, it got triggered by that first touch. First rejection was from the hold level, came back down, got up over the hold. Second rejection was from the trend. Got over the trend, created hold, went to the fib target, dumped. So that's pretty much everything useful inside that has played out, at least once. From creation to trigger to first target to second target to third target. Target blue 3.
So just for the benefit of all the participants, because we have quite a few people here, there have been 4 core terms mentioned here: normal trends, range trends, break levels, hold levels. Is there anyone who is not quite clear what these are? Perhaps leave a message in the chat. It may be good to tackle that early on before we go ahead.
Guys, please, if you don't get something, like, ask the question. I'm always in as many lives with Sin as possible, and I always ask so many questions. So please feel free to be brave and ask. Yes, we have a room of geniuses.
Is it just me, or is the resolution slightly suboptimal? It may be just me, but the way I see Sin's screen is quite pixelated, unfortunately, and I'm just wondering.
I'm streaming it on a 4K monitor at the moment, which is different from usual.
I see. Okay.
Let me try to change it. For now, we only have auto quality and 720p, so I don't know if it improves if I click 720p now. So let's try and then we see.
We should be able to go to at least HD with the server boost. Strange.
I got 1440 as a box I can tick.
Now it's sharp.
Oh, it's perfect.
Does that make a difference?
Yeah, really good. A lot better.
Great.
Okay.
Did you change something just now? Or
Yeah, I just tick some box that says 1440p. So.
Okay. So then I switch back to auto and we see what happens.
So I'm looking at this at the moment. So just after looking at where our short-term liquidity sits this morning, we're kind of hovering between either activating the trend or activating the hold level. So this would wipe out the late shorts, and it would take the one-day liquidity for the longs as well. So if we look at when we created our range trend there, we shifted our normal trend there. So created a range trend here, haven't used it, so it's untested down here. Moved our normal trend here, haven't used it, haven't used the hold level. So and if we look at our short-term liquidity.
So to catch up on the internalization of the core wordings, this upper one is a normal trend because we don't even have 2 distribution candles following the peak of the accumulation candle, right? So it cannot form a range trend, but it's obviously a normal trend because you have some form of peaks. And but the lower one is a range trend because you have 2 accumulation candles after a distribution candle, which starts
Yeah.
anything.
So a trend is going to target a horizontal level. And so this normal trend at the top is going to target a horizontal level. So there's two horizontal levels on this screen. There's a hold level here. Well, there's a break level as well, but there's a hold level and there's a range trend. So if it hits this trend up here, it could travel to here, or down to here. But it probably won't go down to there without bouncing off the hold. The other way, of course, is that it comes here first, in which case it goes up there. And I think that makes a lot more sense just based on where that liquidity is sitting on the short term. Would be that we come here and then we go there and then we go down and hit those 150s. But we'll see. So.
Yeah, from short-term liquidity-wise, it's most recent point of interest is 184, and then just lower from below the week from yesterday. But yeah, biggest interest is like 44 still. So let's see.
I mean, we could get there.
Yeah, we will.
Nothing stops us coming down and testing these, but it's I don't think they're going to give those people a free pass to ride it all the way down.
Yeah.
What is the point of interest in the 150s? So once we've used the hold level and we reject all the trends, are there other time frames leading there, or?
Yeah, there's heaps. There's weeklies, monthlies. I mean, effectively what they're about to do is there's a 30-day actually as well, which is already in place. But what it looks like they're doing right now is they're going to shift the monthly trend. So they're there, range trend untested down here in the 130s. A hold level will appear there in 2 hours and 49 minutes, assuming they don't go below there. And trend will shift to there. So what you then have is you have this level, which can take you back up to this trend, or this trend that can take you back to this level. But either way, you're suddenly opening up a can of worms between sort of that 190 to the 150 area. And it's just going to go one way and then the other.
Great, thank you.
The only thing that really would have stopped that, or potentially stopped that, would have been if it had managed to close over the top of that range trend and bounce off the back and go, which isn't looking so flash right now. But we've got 3 hours, you never know.
Is that top candle, top accumulation candle, could that be a left behind level? Because we've had quite a few candles. This accumulation candle that's going to close, can that form a range trend?
Yeah, I've been wondering that. So
it's not a block of four, but it kind of is a.
But it is technically a left behind. It is technically a left behind, yeah. So these two things are not the same. So that is a left behind hold level because that never actually touched that. So in theory, we also get that as a range trend. So I was thinking about that because all it really takes is for one candle to close over that, and then that escapes all-time high. So that might be plan B. Might not be breaking that one, but you could be breaking that one in another month. Or actually, it would take 2 months.
How long can a range trend be considered useful?
I don't know, at least 3-4 years.
Yeah, okay. It's a tough
Depends on the
question.
time frame. Like it sort of depends on what time frame they're created on. Like those two from 2021, 2022 through to 2024 have pretty much been the entire market consolidation, really.
Wonderful. So, I presume that everyone is following along. If anyone has any questions, like please ask or type them in the chat or something.
So in terms of automating, it's slightly off topic, but it's something I was thinking about today because you mentioned consolidation. If you get TP1, which is 1.618, and then you set your stop loss at entry, and do you have a counter which tracks how many times price goes back and hits that stop loss 1 instead of going to TP2 and in a way this detects when you're in consolidation? So do you have, as part of your automation scene, do you essentially just start taking TP1 100% instead of 50% when you detect you might be in consolidation?
Yeah, I've got no automated way to do that, but manually, yes. Yeah, I can adjust what percentage it takes at which TP level, and if you notice that you say you're in a downtrend but you're still scalping longs, then you just adjust it so that it takes 100% at TP1 on the longs.
Oh, so it's a SQL command, and you just put TP1 to 4 at.
Yeah.
Yeah. Okay. Yeah.
Sure. All right. I'll close my screen. Someone else can jump back on.
I think a general question, at least it came to my mind every now and then, is, I mean, that's probably a personal thing for everybody. What do you monitor, etc., and when do you watch which time frames? But I recognize you have for all those dailies or different larger time frames, often all those arrays. But then we get maybe a bit of that what was said earlier, that it could end up in too many lines and therefore decision-making fatigue. So how do you do for yourself? Take one time frame rather into consideration to actually hit the button and take the trade over other time frames?
I guess you take the one that's got the cleanest structure. You're looking for range trends, normal trends, hold levels, break levels. They're not going to be there on every single time frame, and therefore you can just kind of ignore some time frames. Also, just how much time you actually have, because we've got. Is it that? No. So we've got that, which is eventually going to get us up to here. But when I say eventually, 3 months maybe, 2 months, you just don't really know. It's such a high time frame. How long will it actually take to get there? And so it's sort of useful to know for bias that you've got this as an option, and that eventually you're going to get to a level like that. There's not really a point in opening a trade here and just setting a TP there, and then it could take months for that to hit that. Whereas I suppose if you looked at a 4-hour chart, you're going to find, let's see, You had a 4-hour trend there. You had a break level there. You hit the break level. You scalp to the trend. First, you had a hold level down here. 4-hour hold level. You're along the hold level. So, I guess you could. You know that you've got these targets that are up here in the 240s. They already exist. Or you could just look at a 4-hour chart and go, well, there's one trade, there's another, find what's holding the range up. What's holding the range up? There you go.
Yeah,
range trend, bounce.
No, I get it. Now we're on local scale, so yeah, you just follow the immediate graph that's in front of you. But if I'm not doing you wrong here, I'm quite sure I've seen like plenty of charts where you have from one chart to the next, like I make the numbers up, but figuratively, let's say, we have a 22-day range trend here or trend here, and then you go into the 1 hour and then you scalp it, So
a lot of it's about bias, and also confluence. If you were to look at, say, a 1-week level, and there also happened to be a 1-month level, and there also happened to be a 23-day level, the more things that have exactly the same levels and targets in them, even if the targets are for different reasons, because that's sort of how you understand what's relevant. You might have a target of a range trend on one time frame, and that range trend might actually cross over with a horizontal target of a different time frame. And not only does that then tell you that level's got confluence, but it also gives you a bit of an idea about when it can happen, because you just can't go there really until the two things are crossing over. So having a bit of an overview of all the different timeframes and what they're up to, like say the monthly,
I mean, I get it. When we were in the about 140s in June, roundabout, there were like 10 different things pointing at 189.
Yeah.
I remember that very, very well. So for different reasons, it was extremely likely to go to 189. It went to 206, but nonetheless, it went to 189. So.
So it's things like this where there are a whole heap of things pointing at 123, and even though that candle closed yellow into that, there's probably something on a different time frame that would allow for some kind of trend across here. And see, that would be around that 123 mark. But I think that's kind of an inevitable target, really, actually. Even if they don't screw up the monthly. Yeah. It's things like this which add a lot of confluence to what's happening right now with the monthly. These are weeklies. The 153 level, which is down there, which would be the refined entry of the monthly. So your monthly is 156. The head and time down in price gives you the weekly. So there's your weekly entry inside your monthly. And our weekly trend has flipped. Right. Candle doesn't count. Candle closed. Flips to there. A retest of this broken trend in here. So you can see you've now got the weekly inside the monthly. The resistance has moved to the top of the weekly. It could be forming a hold level here if it closes here in 3 days. And it's closing the monthly under resistance with a similar target. So even if this doesn't close down with a hold level, it can still go here, hit that, and then come down here. And if it does close with a hold level, then it can pretty much just go straight down. Hit that, then go back up. So, I don't know, I guess the reason you look at all the different time frames is just because you start to see that there's certain things developing that's common across them, and therefore you know that it's relevant.
So it's rather the more effort you actually put into reading those different time frames and certain prices in around the range, or even if it's at the exact price, come repeatedly, then also makes more sense to weigh them for the time being until that truth comes to fruition, and then you can move on.
Yeah. So you got that weekly range trend through there, which hasn't been hard closed either. So, and there would have been an older one based off of that. That did get hard closed. So that got hard closed. You got a bit of a bounce. This one never got hard closed. It's pushing down. It's going to maybe create a hold level, maybe go back up first. I mean, you got 3 days. You could get typical scammy weekend pump, come up into here, smack into that. Longs would be chasing that, something chronic if that happened, and then come down. So. Which would probably then also give you that monthly. The monthly pretty much is going to be same as that weekly. So yeah, the reason you're looking through all the different time frames is basically to find where's the targets, and all the different time frames kind of all converging on the same outcome. And if they are, well, it's probably going to happen. And then it's just patience, wait for it, or open a swing trade.
So when we're approaching a level, a target, perhaps we've got that on a higher time frame. Is there something that you're looking for, or something you've noticed happens maybe on a lower time frame? We're looking perhaps for the same thing to be occurring fractally on a lower time frame that gives us better indication that level, that target is going to be respected?
Just volume. So lower volume spikes kicking in, and obviously some form of downtrend that changes on a low time frame, because you'll be in. Where's a good example of that? Like, when this landed on, what level was that? Can't remember. Please hold, callers. Let's find it. 170 4 week, 29 day, something like that. Okay. So we had this level in here, which I think was also a daily level. So maybe let's look at it on the daily. That level. So pretty much what you have with that. What you want to see is that it hits the level, you have some kind of big spike in volume, which is here. Then you want to see it breaking through the trend, which is this candle here. And then ideally some kind of retest of the level, which is this here. And then from that, creates this origin level up here, and then comes through, breaks the trend, and off it goes. So you're sort of just looking for a reversal pattern on an area that you know price should reverse. And it would just be some kind of lower time frame downtrend. And you could break that down even further if you wanted to. So like that's your 1 hour.
Is it likely we'll have a range trend in there as well on a different time frame going across the bottom?
Yeah, it'll form one, and then it will start to follow it. So there's your volume spike. Let's find the 15-minute level, which is there. Okay. So that's the 15-minute level. There's a volume spike. There's your break of the 15-minute level. Right. And then you could pretty much, and that would be the backside of that 15-minute range, which is visible through the FVG. So you could long from here, take a small TP up here. So that's giving you sort of like a 177 to 180 type move. And then from that, have your stop loss just sitting under here. This is pretty normal too, that you'll get this sort of move, you'll get a dump back down, and then it'll go. Because a lot of people will chase that on high leverage, and then they'll just wipe those people out with that part of it there. So it's like what we saw last night, actually, I think. Yeah.
Yeah, just now.
This kind of thing. Wipe out. Pretty much how it goes. And then now we're sort of getting people to capitulate.
Yeah, into the stop loss to the left, yeah.
Yeah, you'll probably see this push back up. Just this is pretty typical market maker type behavior. They have a bottom. They get people to chase the long. They start getting confident. They start opening their longs and their positions. They then wipe them out, and then they spend enough time down here to put the shits up everybody that is sitting in negatives and thinks that they're never going to see any profit, and then they go up after these people close their positions. So it's
and also make new shorts entertain, because it looks like
that's it. They flip.
182 is like safe, and they accumulated more there, and so we will go to 184 plus next, which aligns with the other stuff again.
Bingo. Yeah, I actually think like 184, 186 is very, very possible before that next dip. It's going to use one of those higher trends because they're the ones that can actually send it back down to that lower level. So I reckon it's going to go up there and do that. But like you just said, everyone will be flipping short already because they've seen this, they've seen a low. It's come down here. This is now getting them all thinking, oh yeah, it's going to go down, down, down. But
yeah, that's really time, basically, because 184 was already juicy, but they didn't take it earlier, so that made me wonder. And they do just the inverse thing right now. They go just below the stop loss, below the lows, entertain. People are like, oh yeah, okay, now is the time to short. Yeah, I'm sure. And they accumulate all this, and then they trap them, go back up, fish double the size, and have more money.
A 2-day, you've also got a 2-day range being built. And you're on the trend, and the hold level's up here. So there's 186. You're on the 2-day trend. You're about to open a new candle in 2 hours. And if you open that candle above the trend, it's going to bounce on the trend and target the hold level. And you're still within that range. So that hold level would then be able to break these trends, which can then get you down to those weekly, monthly levels. So all these timeframes operate based on the same rules, and they all operate internal of each other. So whatever the big time frame wants to do, like go down to those lower levels, is going to happen. But these levels have to actually do what they need to do as well. And then that all lines up with psychology and liquidity and
it's a mix of gravitate through these trends, holds, breaks, while generating liquidity on the way that will then make the price gravitate to these liquidity points, which will create new trends, range trends, holds and breaks, and yeah,
that's it. So where your thesis could change a little bit would be in the next 2 or so hours if it pushes this candle down to be very clearly below the trend, and it still doesn't. At that point, it still doesn't break the trend, but it's almost certain at that if it then pushes up there, it will hit that and reject. Because if it starts underneath here and then goes and hits a hold level, that's a dive, but in reverse. Anything under here that heads up there will go down. Anything that stays above the trend still has the actual chance of getting through the hold level, hitting the break level, using the trend and hitting the break level, and then by that, so you need to hold that trend if you want to break that hold and break the break and break the break. But if you start underneath the trend, then touching the hold is effectively catastrophic. So,
that candle that's been left there, the accumulation candle. I don't know if this is a good way to look at it, but I try to look at everything just in 2 candle ranges now, simplify it all. That accumulation candle is essentially just the pullback of the range before it, right?
Yep.
And then on a lower time frame, it's on a daily. Maybe it's created to accumulation candles or something.
Correct.
So because that's only essentially the pullback of the down range. It's only a one candle. Does that mean that's going to offer less resistance when we move back up?
No.
Presuming
No, it's quite a solid hold, that one, because the break level is so far up here. So the whole candle is everything between the start of the body and the wick of the break. So if you were to put like a rectangle on that. So the ones that fail the easiest are the ones where there's a crappy one. That's a crappy one. Because it's really just that. Because once it gets over this thing or closes over this thing, then chances are that whole range is just going to fail. So, put that in there as well. Look at that. Aren't they annoying little shits? But they're good when they break. Pretty good example, that actually, of why these things matter. So that was what it was targeting after it hard closed there. Didn't get there. Something else got in the way, but
So just to throw it out to anyone again, like if anyone has any questions, please type them in the chat or ask. It doesn't matter how basic it is or complex. Also, Stin, just to be aware of the time, like if you need to shoot off, or we've already been on here, I think about an hour or so.
yeah, I should probably have a look and see what's happening tomorrow, I guess. See. All right, I'll just jump off and someone else jump on.
All right. So, would anyone like to share their screen? Does anyone have a chart they're working on, and they want some feedback on it, or they want to look at a setup or something that we can have a look at? I'm happy to share my screen again, but if someone has something they wanna share with the group.
Yeah, go ahead.
I'll just put my screen back up there, and then if someone wants to jump in, just go for it. Don't think. Yeah. So I'll just go ahead and keep going until someone interrupts me. So something I've been doing recently, which has really helped me as a beginner, is try to simplify the ranges. You know, I'd come to a chart. Let's find a good example of this. I'd come to a chart and see something like this. Because as a fairly new trader, you know, the lower time frames are appealing, and I see something like this, and it's just so confusing to try and understand what's happening. And just going up a few time frames until you get close to a 2-candle range, that's to give everything much better context. So maybe here on the 30 minutes, you know, we've turned turned all of this craziness into a few candles, and then we can see we have the tab range, we have a pullback continuation. We can clearly see the main hold levels and the break levels. And just doing that was something that really helped to simplify the whole process for me. I don't know if anyone else has been looking at lower time frames or feeling confused with how many hold and break levels there are. But this is something that's really helped. And then, you know, if we have a little pullback like that here, then you can just go and inspect that. And we have this level here. Maybe just go down to the 5 there. Pretty much, maybe the 15. We can just inspect that as a range, as opposed to, I mean, you know, 10 or 15 candles in a range or something like that. Clearly, you can see the main hold levels there. That's, you know, something like that one is much clearer to me, as opposed to this, which is on a 3 minute is quite confusing. What is really happening here? Because we have the backside and front side, but you know, just going up a couple of time frames, it really makes it simple. At least for me, anyway. That's something that's been helping me.
I think that's a really important concept, and I find that it's all fractal timeframes within fractal timeframes. So the lower timeframes move quicker, so you can see how things progress quicker rather than waiting months and months. I also noticed that you have a really nice set of templates there. One of the most frustrating things about charting is actually using the tools, and I noticed that you have a set of templates. Do you mind talking a bit about those and you know, how to create one? Perhaps just starting, it's like really notice you have a hold level template there.
Oh yeah, okay. Oh yeah, perfect. That's a really good question. So I'll just explain it as if we have like beginners in here, and for everyone who already knows the basics, I apologize. Main tools that we use are over here, which is the ray. And we do that for our trend lines and range trends. And you want to make sure it's extend right line, because if you have that off, it'll just give you this. So extend right line, and that'll give you this infinite trend line. And then how I customize those, you can right click and template, and I have all my settings here. So if I'm, and I have a night mode and a daytime mode, but essentially I have my range trends here, and I've got them all down to the black range trend. This is for my daytime setup. So these are essentially the distribution candles, and then the green candles are the accumulation. And then I have them labeled. So let me just put this one on. So this will give me my range trend for 1 day, and it has the little label. And you can just double click and go to text. You can put your text in. You can change the color. You can change the size like this. It's just a double click. And then you can go template, which is down here on the left, and then save as. And you could just put range trend, green, whatever color your candle is, and then whatever time frame. Or if you don't want to have the time frame, just leave it off. And then when you right click, and you draw in your trend line or whatever, you just right click, template, and you've got a whole list of options here you can come to. And the ones that I come to the most, I list under 1, because they'll be right at the top. These are the 3 that I use the most, and they're just right at the top, so they're super easy to get to. And then the ones that I use the least are down here. Obviously, I've got quite a selection, and then I also do that for our horizontal line, which is cool. I think it's just horizontal line, right? Yeah, horizontal line. It's just a right-click template, and these are all the hold and break levels. So hold, black, 1 hour, and I can just, and then green as well. And it gives me the little label on the side, so I know what it is. That it, you know, you spend like 10 or 15 minutes setting all this up, but in the long term, it's set. It saves you tons of time. So you don't have to keep going in and typing in whatever it is. You can just go to template and select it, or right-click template, and then you've got them all here.
That's super neat. Thanks.
Yeah, that's something I've and I have a daytime. I have in the daytime I have the screen white, and then at nighttime these night candles, the distribution candles, turn to this blue color, just to make it easier on the eyes. So yeah, and then something else maybe that's helpful for beginners. I'm sure everyone knows this, but the setting up here where you can change however many screens. Maybe you want to have the side-by-side option. And if you, at least on a Mac, if you hold Option and just click one, it very quickly closes the other one, and you can just zoom in. This is something, I'm sure everyone already knows this, but it's something I only learned recently. So I can just hold Option and click it, and it goes back to the 2. And then if I want to have this one up, I just hold Option and click it, and it comes back to this one. And I actually didn't know that before. I was just going up here and constantly going back to 1 and 2. So how that's useful is let's say you want to have 3 screens open. Let's say you want to have your 4 hour here on the left, and your 1 hour here in the middle, and your 15-minute here on the right hand side. Because you want to do your entries or your low time frame. But having 3 screens open all the time is a bit of a pain, depending on if you've got a massive screen. You can just quickly navigate into each one just with that Option key. You can just bring it up and make your adjustments, and then you can just go back to this overview. You can just kind of watch price play out over the 3 time frames, and then when you want to get back to your 15 quickly, just Option, click, and then you're straight into it, and you can do your adjustments. Unless you have a huge screen, and then I guess you can just have them work. Yeah. Okay, I think do we have a question here? I'm trying to take all this in, but I'm super basic with the bigger stuff. I can chart shorter time frames decently, and that's where I feel most comfortable trading. When it comes to longer term charts for day trading, I just don't trust myself when I get frozen with the what ifs. Yeah, I know exactly that, because it takes so long to play out. What do you all actually use day to day? Do you mix all the time frames or focus on one? Since calls, he often uses right about both directions. Yeah. Okay, so time frames is a good one. Does anyone want to speak on time frames? Nate, I'm not sure if you're still in the call, but I know you've been a big proponent of going up time frames recently.
Yeah, what should I say about that? Let me read the question again.
If you want me to shorten it, I can just speak up.
Yeah, go ahead.
Yeah, I just didn't want to jump over top of you guys. So I love hearing all the details, and you have a good day of it or so, and then you start to listen to some of Sin's comments, and it's always, you get this confidence like, well, it looks like we're headed to 195, and it isn't, but like 10 minutes later going, well, there's always the possibility we go to 140. And it's, and it's coming from such long distance charts. And so it throws you, and it kind of can freeze you. And then I go back and forth from looking at all of that in so much detail versus being successful with looking at, what the trends are currently doing in the 4 hour, the 1 hour. And I guess my biggest concern is I was so incredibly burnt that I never want that to happen again. And I'm successful with the shorter stuff. But I think, and we're guessing because we don't share dollar amounts, you guys that are doing this really well are leaving things in for much longer because the longer charts. And so you're not in and out all the time quite as much. I would imagine the anxiety levels are a little less, maybe not. So I guess the question is is it time that gets you to that point? Or do you really focus more on the shorter time frames to trade daily? Or do you use that as your deciding factor when you're going in which direction it's going? I don't know if that is a clear question, but it is confusing looking at all of that as a whole.
Yeah, it sounds like to me you're on the right track, because if you're doing like a high leverage entry, you really can't handle much drawdown. You could have $10 in drawdown before we go to 189, right? And so,
Right.
I'm actually I also like I'm stuck in this spot right now where I'm trying to get really greedy, like 5-minute entries, and then with the intention of actually catching an up move that where I could put like an in profit stop loss and ride it for a few days. And that's that whole thing I think is the game that all of us ultimately are trying to play. Yeah, I don't like, my trading is still a lot like yours. Like I'm mostly I have to take my information from the low time frame, and those are like the moves I'm making, mostly because of the leverage I do. But yeah, I'd like to graduate to more of a swing trading style, especially as you move up to higher time frames. It's less confusing. You have less time frames above you to confuse the PA that you're doing, and so if you're finding success, yeah, I don't know. I guess you have to be confident. Like it's hard to be confident when you see a range trend on a high time frame and say, oh, it's going to reject off that, because it could wick through it a ton, and then you know it could stop you out with a high leverage account. So
we just had a great swing trade. It was on a demo account, but me and Nate have been trading the German 40. We had a great 12-hour fib trade recently that actually paid out. It took about a day to hit its target. But it was the first kind of long swing trade I did, and you know, the price goes up and down and up and down. I guess the more you take of them, or maybe take it on a demo account or with a small position, I guess the better confidence you get in doing it. And seeing a 12-hour fib trade play out definitely gave me more confidence to by the higher time frames.
Yes, and that sounds really appealing and attractive, to be honest with you. And again, sorry to be so basic. So how does that even start? So where do you start with you know what, I'm going to give a 12-hour time frame, go at it?
Can you question? Let's do it.
Yeah. All right. So I'll quickly run through it. No, this is a crypto thing, but so this is the German 40. This is like the equivalent of it's like the German Nasdaq or something, isn't it? The German S&P.
Yeah, more or less. Yeah.
So basically, what was the one? Was it this one that we took, wasn't it? Yeah.
It must have been
from Tuesday. So it was pretty basic thinking. This is the 12-hour. I'm just going to get rid of all these little things here in case I've made a mistake, not to confuse anyone. So we had this big trend coming up here, and maybe this was actually the daily trend. And yeah, so when we were actually looking at the chart, and then here on the 12-hour, we had this engulfment, and price here never hard closed the trend line. So I think it was just simple. We just drew the fib on. This was the engulfment. And then I think we first entered here, right? If I remember rightly, it was this candle.
Yeah, exactly.
Price just pulled back in here. And at this point, I was just like, you know what? I'm just going to give it a go. I've never done a 12-hour one before. And we got a load of up here. And then eventually price came right up to the 1618. So, you know, the other thing I learned about these is you really have to take your profit at the 1618. Or at least like, I think what Sin says is like take some off the table. It's so tempting. Price comes up to the 1618 and you're just like, you know what? This time it's going to go up here. And it just like, so often it doesn't. and this is a great example of that here. Yeah.
Okay, so sorry to back up just a second. So you knew where to start that by what? Sorry, what gave you the the idea that this is where I'm going to start that 12-hour? Like you said, it didn't close. The 12-hour didn't close at the trend line.
Yeah, maybe I've got this wrong here, but we had this 2-candle range down on the 12-hour. This candle came under the trend, but it didn't hard close. So the body would have to open and trend close like that. There was no hard close, and then we get an engulfment, which to me is a bullish sign. It's also the fib trade thing. If it's not going to continue the range down, and then open a new candle here, and down. That was kind of enough, at least for me, to say this has a good chance of playing out. I may be wrong there, but it worked out. So
it was a bullish candle, and you're above trend, so that gave you some security to get in.
Yeah, I think I had some other levels drawn on as well, but you could look for like range trends and stuff like that. I think we have an origin.
If you want to know a bit of a tip too, not only did it close back up above trend, but what it actually did was it swept the trend liquidity. So going down like that below the trend, then coming back up and engulfing means that they've just stopped out a bunch of traders that had their stops sitting under the trend, and then they'll normally take that up to TP it somewhere, which is why it went up to that 1618. So there's always liquidity just underneath trends, and then that's why you get dives of them. So it's the other thing is it stayed inside the break level of those 3 accumulation candles across to the side there. So if you come across to your left, keep coming across down, right.
Yeah.
Yeah, that'll do.
Yeah.
I mean that's another one there, but so you were still inside the bigger range. You swept the liquidity under the trend. So yeah, entering that, I would have probably entered that like at the level of the engulfment, and then I would have added to the position when it bounced off the trend, and then TP up at the 1618. So that's a good one that played out exactly like they should.
This is an origin level as well, right? When it hits here and makes this range.
Yeah, correct. So you had a trend swept to actually I don't think it didn't hit the origin level, but it might have.
Yes, we had that as a safety.
Well, you're also dealing with because you're dealing with a chart that's got displacements on it. Notice your distribution candle. Your distribution range is up higher than the accumulation candle prior. So if you look, see that? So you sort of got to just visualize that you can take that range and shift it down because it actually did hit the origin level of those other ranges. Yeah, that's trading on charts with displacements can be a little bit hard. You're better off to do it in 24-hour markets just to be real safe. So
just for everyone and myself, the displacement is where the next candle doesn't open at the close of the previous one.
Correct. Yeah.
So here.
Yeah, so if you sort of just visualize taking that range and just shifting it down, what you actually then get is you get a trend that dived, hit an origin level, recovered the trend, and went up to the target. With the displacement, it kind of looks like it didn't hit the origin level, but it actually did. So, yeah. Displacements used to do my head in.
And when you said hit the target, like I get but how did we know? How did you know the target was there? Just the 618?
Yep.
That's I understand it from Sin. It's the this level is drawn from the top of the body of the candle that's being engulfed to the wick, the bottom wick.
Yep.
And when price enters into this area, our buy zone, then our target is the 1618 here.
Interesting.
Yeah. So the only thing that will really get in the way of that will be a trend. So you can pretty much guarantee that the 1618 is going to be struck from any engulfment unless there's a trend that gets in the way of it and stops it. Which is why backside moves are generally more reliable, because the trend will be further away. You can digest that one for a while. I'll go back to muting myself.
Yeah, so higher time frames. Yeah, I guess I'm the same. I'm so tempted and drawn in to trade the lower ones. Nate, have you had more success recently doing the higher time frame entries? Because you definitely had your win streaks has been going up recently.
Yeah, a lot of that has been with the low time frame stuff. I am taking instruction from like a lot of 4-hour range trends and that kind of thing, but still entering on low time frame.
I think what this question and general wondering addresses is simply, if not the most important thing, trading is like the discipline and emotional management, because if you trade lower time frames, you have obviously a much faster resolution time to get an answer to your theory compared to if you trade higher time frames. And emotions are a bitch from day to day. It also can fuck with your sleep if you cannot manage probably position size or greed, depending on what you do. But I don't know, let's say you have $1 million in your account and you take a high time frame trade on a setup, but you take only like $5,000 you put down to, then chances are decent that you are willing to hold through that theory. Because if you have like a monthly chart or 35-day chart or whatever, and something hits and it's entry and it would take maybe 3 months to hit the target, then you also need to be capable to emotionally sustain your theory, because those things will take their time to play out. And you don't have that as much if you trade 15 minutes, 4 minutes daily. Sometimes weekly can go very fast, also 5-day, whatever. So we have a very fast response time there. Then you have either profit, or if stop loss hit, a real kind of relief feel, because then your trade is just gone and you take the loss and it is what it is. But yeah, if you trade high time frame stuff, I mean, the technicals are completely identical. For high time frame stuff, I prefer other indicators also to get the confluence for bottoms and tops. That's where RSI divergence is very neat, especially, and VWAP bands. But yeah, all it comes down to basically in the end is to be also emotionally prepared to stand behind your trade and theory that this will eventually play out, and then just let it run until it eventually goes there.
I think you just nailed so many points. Like, first of all, maturity and wisdom, shining from everything you just said, and the emotionals. I love what you just said though about the fact that they're the same. Like, that is it's a comforting thing to know. If I can do it in the short term, you can do it in the long term. But it is all about trusting it, right? What you just said is, if you trust it, I think being newer at it, I don't trust my processes yet, and that's why I'm here. So that'll be huge to be able to trust what you're putting down on paper and draw out.
Yeah. You can only exercise it by gaining the comfort by probably going through hundreds or if not thousands of iterations in a lower time frame until you eventually get there, and then take a shot, because you cannot like preemptively say, okay, I will be able to do it. You will only know if you actually make it. Let's say again a 35-day entry of whatever, and are willing to sustain that, because I don't know if you have family, if you have kids, if you have a job, whatever your obligations are in your daily life. Maybe, depending on your position size, you just hang around with your relatives, and then on this 8th day of being in that trade, you randomly think while you're having a beer, how's my position doing? And then you're like, okay, now it hits me on my nerves. And then the next day comes, and the next day, etc., etc. And that takes chunks away from your mental and emotional capacity to actually, stay in it. And then you start questioning yourself, and you zoom in, and like, okay, maybe my theory is wrong. I should dig a little bit deeper, and then you actually start consuming capacity, even though that theory and that trade never changed, because it just takes time to play out, but it gets you emotionally, and that's where most people lose out in the end, which is not judging. I lost out so money from a lot of trades due to emotional decisions. Not better at all about that, looking through history. But that's also where this, what you said, probably wisdom comes from.
I think part of my problem too is just I'm not trying to take over here, but like just when you're trying to learn it and you're just engulfing yourself in it, that also becomes part of the emotional and the connection and cutting all these other things. Yes, I have a family, I have a business I run, this has become engulfing because I'm tired of doing it on the side every once in a while and then getting stuck because I didn't know what I was doing. I never want that to happen again. I want to get to the point where I can leave it and I can trust the process. And so it's so much of it is diving into just this training and learning right now.
I can tell you that since I started learning this stuff, I'm still making mistakes. The trades that I lose aren't because of this analysis. The trades I lose are just because I jumped in too early, or I bought when I analyzed the chart, or I just had FOMO. Whenever I sit down and do this stuff, it's like it wins and it really works. It's just
Yes.
you just got to put the reps in to get the confidence.
Yes, my worst trades are the ones I'm doing in the car because I looked like it looked like it was going somewhere.
Yeah, I even today me and Nate traded the Nasdaq, and the first trade I took, again on demo account, the first trade I took wasn't based on, because we were at all-time high on the Nasdaq, and every day it's seemingly making a new all-time high. I was just like, you know what, fuck it, I'll just go long, see what happens, and I went long, and the market just tanked, right? Just absolutely dumped, and on my demo account I was down like 700 or something. And then I started, once we were moving down, I started to do the analysis of the chart, the range, trends, the break and hold. And then I had about 5 or 6 winning trades, just trading it back up. Which was, I think it was about $1,500 profit on the demo account. So it was only the dumb FOMO no analysis trade that failed. Like all of the other ones worked.
Yeah, and a lot of it comes really back to position sizing, because even if you try to pretend while you learn, yeah, I'm good, I will sustain it, but when a trade runs against you, then you will see if you're fireproof. And if you have like 10,000 in your account and you are willing to put down for a higher time frame trade 5,000, then that stress, if not playing out instantaneously in your favor, is much higher than compared if you have $1 million in your account and put down 5,000, because then you in quote unquote couldn't care less if it takes a month to see if that 5,000 goes back up from being down 1,000 to then being up 1,000, you know. So I guess a lot of people also lose basically on the leverage multiplayer. It doesn't matter how you eventually define position size. It can be 20x, 30x, 50x isolated. That doesn't matter. It's always in relation to your total capacity versus the position or laterally you are at that moment in time putting down for the trade, are willing to lose, or actually not really willing to lose, but would lose in case it's going against you. So if you want to learn higher time frame trading, find one that you think is fine and makes sense, and then just try with the, I don't know, with $100 position, and then get some confidence in, because you cannot force to have a future higher time frame trade then going as fast. And then, you know, even if you build up all this confidence, only if you actually exercise and execute it is when you make those moving forward improvements.
I would say also journaling your trades is super important, and using the replay tool, that will just take you back in time and you'll have a lot of future data to look through, but you will be blind to it because you will not see those candles. So just use the replay tool and it's really handy. There was an expression earlier in the conversation about going up time frames. I tend to go down time frames, starting from larger ones like monthly, then down to weekly, etc. And you can also spread your position. You don't have to shoot all your bullets on one particular level. You can average it, so average into a position. And I'm a bit of a one-trick pony. I find that one thing that works really well is hold levels. And we had a conversation, it was probably a few months ago. Older hold levels are very good. They have a very high success rate. So I usually look for unhit hold levels and I just lurk. I just wait in ambush. But that trade you demonstrated earlier on the normal stock exchange, which has displacements, I wouldn't have doubled down on that trend. I would have waited for 0.5 to double down. And that's what I need to become better, using trends more. So I think we all have lessons to take here. It's really interesting.
Yeah, and thanks for sharing the insights, all of you also, and making this happen. I think you also brought a very important point there, which is lurking in the bushes, as you called it. There's actually a very famous saying in one of those trader books. Don't ask me for the title. I don't know. I can't remember. But the quote is basically the greatest traders or investors of all time are very good in doing absolutely nothing for the longest periods of time. And that's really what it gets down to. Because if you get patient and just let the chart do its noise, if you, let's say, you have a 1 week setup or 10-day setup and you see, that's the entry I will take, your biggest enemy will be FOMO and greed until that entry hits, and then you front run yourself if you can't manage this patience part, and same goes for the exits. There will be a lot of noise because that's what the market makers want you to do. They want to trigger emotions and make you take actions based on noise that in the moment of time you are staring at the chart are causing all those ifs, quote unquote. And then you take an action that you wouldn't even think of taking when you were not on the chart at that moment in time. So if you can manage to ignore the noise, stand behind your theory, and be patient, either for entries and exits, that will most likely be the biggest step for most people. I would, just bravely claim to really help them.
Yeah, that's a fantastic point. I would also add to that as well that using a demo account is perfect, because if you do get FOMO, just take that trade on the demo account and see how often it doesn't play out.
That's actually a great idea. Never thought about that.
I have a question here. Is there a time frame you recommend learning on? Like 1 hour, 4 hour, daily, 5 minute, 15? I feel like something on the lower end would be more helpful to get iterations in, but I think it might be okay. Like what time frames does everyone learn on?
Yeah, I wrote it earlier in the iPerps channel because someone asked about our divergence. The most basic triplet and quadruplet for me is, and I would repeat it to others every time, is you want to have like quicker responses and quicker learnings. It's the quadruplet of the 15-minute, 1 hour, 4 hour, and daily to look for confluence, convergences, and things that match. And for the triplet, as the next step for trades that may run a little bit longer, but not even that much longer, is like a combination of 4 hour, daily, and weekly. Because also that's the time frames that the most money is at, because those are the time frames that are traded the most as the base level. The most interesting stuff is not on those time frames when you become advanced or expert or whatever you want to call it, because that's where the sneaky stuff is. That's where very cool trades are, and they also work very well. But if you have like a hold level on a daily or weekly or 4 hour, it's almost a guarantee you get a bounce, either direction. So it also makes sense to exercise on those before you jump on the 111-minute time frame, where nobody's looking at other than bots.
Also, by now, the market has a lot of data. So I stress using the replay tool is a really, really good thing to do. Candles start on the 1st of August, 2020. I think, I may be wrong on Binance, maybe even 2019, actually. I may be entirely wrong, but we have a lot of years of data. Just go back to 2023, 2022, doesn't matter, and just trade ahead, see how your trades play out, journal them. I think journaling is something that's very important. Keep track of how you perform and what your pitfalls may be. Reflect, and yeah, that's the best.
Yeah.
That's great.
Sorry. Yeah, keep going.
No, that's great advice. Definitely to do the replay tool. To put as many reps in as possible.
Yeah. Honestly, one reason I started, I guess like 2 years ago, 2.5 years ago, I don't know, taking like real claims into the chats was to use it as a set in stone journal that I cannot trick myself out of, because you also talk with other people. They are aware, maybe they don't recollect, but I will, and then I can, first of all, come back to it. And B, if I shared my thoughts around that trade, then can reinstantiate the idea of back when I made those claims or forecasts or ideas, whatever. And then, supervision myself basically about those things, either if they played out or not. And if that helps people, that was like a fortunate outcome at some point that developed itself. For me, failing enough to get better eventually and then keep doing it. It's like a win-win on many layers. Because I'm not so much the notepad kind of guy who writes it down for me myself. Should probably be, but have to compensate the weaknesses with other tools, which is then chatting. So
Something else that I've done recently that Sin said in the Discord is to watch the 1 minute chart. So I'm obviously not taking any trades on a 1 minute, but just watching the 1 minute chart to see how price moves. You're obviously getting a lot of candles. It's really fascinating just to kind of watch each candle play out over the minute, over every minute. You see how it's the hold level, and then moves down to the break, whatever, or to the next hold. And you're seeing that so much quicker play out. So maybe take 10 or 15 minutes a day and just kind of watch the 1 minute and see how the chart plays out in that much quicker time.
Yeah, 100%. Yeah. It also makes you learn how. Yeah, because as the time frames are all fractal to each other, there's technically no real difference of trading a 1 minute chart versus a monthly chart for the outcomes if a condition is met under a certain setup. So you can exercise really quick, maybe go through the 3 minute then and just take 1 hour or whatever, or 2 hours on a training exercise session, and then draw these lines and then see how it goes. Can also use it for that. Not only that, there's a very interesting thing going on lower time frames, which is candle displacements, even on the good data feeds, and that phenomena of price gravitating to those candle displacements is pretty huge, because there's a lot of money in how you say it in English, misplaced order books. Like if you have difference in the candles versus how the order books matches. So basically you have not matching open and close. That's also like, a money leak in the order book of the market maker. So he's willing to revisit those prices to fix the order book and get it aligned. So you can also take trades on those. I could try to find a very recent example that I'm not just talking and you can see it, what I'm talking about. Let me check. Oh yeah, that's a good one. Let me quickly share my screen for it. It's actually super recent. At the app, yes. Oh, can you see my screen? I guess so. Okay, my own.
Yep.
So, so candle displacement, we had it earlier, is like not matching opening and close, and we have a pretty cool example right here. My own screen is lagging while the stream works. Okay, now. So as you can see, we have a candle displacement here. So this candle closed here, but it opens here as a print. So market maker is really willing to fix this, the misplacement, because there's money in between whatever 174,284. And what he will eventually do is revisit this price to, as you can see, just a few minutes later. How long did it take? 23.49 was that candle, and this one is, so about 25 minutes. So if you find a good long entry for whatever reason, and you knew, that might be a good place to take a long, you could have easily longed into the target of this candle displacement here, and just TP right there. And you will find it all the way to the order book or candle feed, and also take trades based on that. And they sometimes go back really, really fast. So that's a quick resolution. It resolved very fast, comparably, 25 minutes. But sometimes, I don't have an example at hand, but I did it a lot in the past. You can have like a candle displacement, a very, very large one from like a week back. And let's say price is trending up, but but you are left behind a candle displacement below the price. And then for other confluential things, you will find whatever kind of top. You can be almost certain to short right into this candle displacement. Yeah. So that's the theory behind that. I don't know if we have like super recent examples right away. So yeah, that was one, but it's, yeah, questionable if that was the reason to go there, because it lasted right through it, but it immediately also this displacement here got fixed with this candle here, for example. Same here. We have like two, which is super rare, like next to each other. This gap here goes down, jumps quickly back up, and then follows through on that downtrend after. And that's what the market makers are doing, like nonstop, because yeah, they have those misplacements and they want to fix it. Oh, that's a good one again. It's a bit laggy, sorry. So you have this candle displacement here, opening here, closing here, opening here. Then it does whatever noise in between, and then this wick dips right into this pretty much exact price for exit to short into. And if you find for other confluential things, I don't know, a liquidity sweep here, or yeah, you know, any condition to short around here, you could have like easily taken, I don't know, let's say 0.6% trade into this candle displacement as an exit right to the wick. Yeah, so certainly something to explore and discover. It's also super easy to understand and backtest, and very, very interesting phenomena. You find it in a lot of order books, and obviously the market makers are in parts fighting against each other to fix their own order books, because bots will relentlessly average out the prices across all pairs, because they are arbitraging 24/7. So that's why those prices are aligned. But the displacements are obviously locally per trade pair, per market maker. So they also have like, yeah, pulling strings with each other to get their shit fixed. Yeah, that's basically about it. Any questions?
That's arbitrage. That's arbitrage trading then. People buying the difference in price.
Yeah. Yeah, you can
You'll see
try to
those
do
ads
that.
on YouTube of people saying about arbitrage trading. I was wondering what it was.
Yeah, it's you need like super efficient servers next to their market maker servers, honestly. Otherwise, they are, in my opinion, I don't know, maybe I'm wrong here, but out of the gut, I would say there's bigger money that is already doing it with more efficient teams, hardware, software, that are arbitraging those tiny arbitrageable differences. So making money there is like a really cutthroat business, I'd say. Yeah, I mean, you can do arbitrage yielding. That's a very obvious strategy. You're borrowing money at the platform A and lend it on another platform that gives a higher return. That's like super basic yield arbitrage, and everybody can do that. Yeah, just doesn't have like the same gains, let's say, as like a 10x long or 10x short, because those APYs are yearly, and if you arbitrage 2% on a year basis, you need a long breath to have like significant gains or huge capital. Yeah. So we have like 2 more texts or questions from Eclipse Nova here. Would you like to follow up on addressing those, Curious?
The time frames?
Yeah, I didn't read through it yet. I just spotted that they are there. So
Yeah. We talked about his question, saying about what time frame is it good to learn on. Yeah, I think whoever said that the hourly 15-minute and 4 hours are a really good place to start. You've got to take into account the higher time frames, but you also want to have enough movement on the charts where you're actually learning. And if you're just on a daily or a weekly chart, you're going to have to wait so long. You're not going to get enough reps in. And then if you're just on the 1 minute chart, I think it would be really hard to learn from that because you're not taking into account the higher time frame levels, and it might be difficult to understand why price is suddenly doing what it's doing if you haven't got your higher time frame levels drawn in.
yeah, having
here's
those
interesting.
around. Sorry, keep going.
I was just going to say, here's interesting right now on the chart. I could be way off here, so everyone take what I'm saying with a pinch of salt. But this lower time frame looks like it's trying to, at least to me, looks like it's trying to hold this level. We are on a break level here. I guess it's why like lower time frame stuff is so, you could sit and watch 15 minutes of 1 minute candles here, and then price could just dump or.
Yeah, they're really going hard on the monthly closer for sure. They don't want things to be pretty on the rollover. Can change. We still have 90 minutes. Can just do this in like no time. Wouldn't be.
This is something
super rare.
This is something I've noticed with the squeezing that happens. I guess where you get those kind of flag patterns sometimes, but here we're essentially in a break or an origin level, and then the trend is kind of, as I can see it here, we're kind of laddering down from old levels, and then we're just squeezing into this break origin thing that's formed here, and that's something I see tons of happening on all different time frames, where it kind of seems to ladder down, holds or the trend, but it's just going into one horizontal level.
Yeah. And in regard of this higher time frame question, I don't have enough history yet to, let's say backtest, challenge, match all those options into one collection. But like personally, I have like for sure like a monthly chart with certain tools activated to give a frame of reference, give a guidance of where we are on a longer time frame. So we have like these VWAP bands. They give like a nice value weighted average price, this acronym. Usually put them on tops of trends and bottoms. And then I added 2 more on this top and this bottom here. And then you get like very neat resistances and supports. Also to scalp around. So as you can see, if we zoom right in here right now, the price did fight all these monthly reward bands around this price all the time. Tried to claim it right here, but eventually failed and follows through on dumping it. Likelihood is we visit this one next at some point. Not saying it goes immediately there, can perfectly go back up, 184 again, maybe touch it, but it's a great way to have like a higher time frame of reference for swing trades, also scalping, facing larger resistances, supports. You can use it also on lower time frames and anchor this. That's what I have for like on my 4-hour charting. That's just like the local top and prior local bottom. And you get all sorts of trades out of this stuff. Yeah, depending on what time frame you're looking for. You can put it also on a 50-minute chart on tops and bottoms, but you will see the price usually gets reactions around those prices. A bit too much horizontal lines here maybe, but if you watch this closely, I mean, the 195 target was talked a lot before when we were around here, so yeah, followed through for multiple reasons to go back. For the double crossover, like here for a while, consolidated below until eventually breaks out and goes to the next level. Get a reaction here when it has fallen the first time, taken as support, bounce off, reject again on the next line, go back again, then eventually breaks through. And then you can see how much it is hugging this band and then actually losing and then going like for a deep dive afterwards. And you have the bounce from yesterday right here at the spot. So definitely an indicator, very basic tool. I find it, where is it?
This is the V1.
Is it now? There you go. Anchor VWAP. It's really default tool. So if we go on
Where are you placing it? Are you placing it at the pivot points, or are you placing it on like an hourly?
So even if I go on the monthly, let's say, on this chart, to anchor it at this top, it works better if you then zoom in actually. And depending on how many candles you can have, if you put it on a monthly, I would at least try to find the 1 hour. Yeah, okay, that's annoying. What was the top again? Generate 25, yeah. Towards, yeah. Wait a second. There it is. So you just go to the top candle and click the Anchor VWAP tool in the, what is it, the 5th menu. And then you just click the candle and then it will draw the rest for you. And you can already immediately see what happens afterwards. How it's rejecting those, trying to pretend them as support, then you have the stop loss below and then it follows through. And usually you take like, depending on what time frame you observe, the highest top and the lowest bottom. So you can either choose this one for sure, or then that bottom, and then match those, see what you got. Yeah, already pretty decent results on an immediate first look. I mean, that was an outlier sweep, but basically price kept bouncing between this, then kept rejecting, following through, going lower. And
When price comes to one of those bands, what are you looking for? From it could be an entry.
Yeah, that's where like confluence is added from this one. I rarely just take a trade based on that single line. I would take RSI divergence as I usually prefer to trade based upon. Then you could add those trend, rage trend, hold level, break levels, and then see how much confluence you will get from those bands in alignment to the other TA you are more used to already. But I like them especially, that's why I said on a monthly chart as a frame, as a framework for like the really large and high swings. So, for example, when I was not as much back as I might be right now, and I was seeing the price creeping up from these lows, and everybody start to get super euphoric, you know, like, oh yeah, next all-time high, new all-time high next, blah, blah, blah. And then you see like this super higher time frame bands coming all the way from 2021, then the new stuff that's printed in 2025, coming here and putting a lot of selling pressure while going to this, semi-euphoric top. But it's smashing through it. You know, you want retests at least. That's like every basic TA goes with some form of retests. Either a rejection or a support holding. You want usually good, strong rejections or supports, or resistance or supports go hand in hand with some form of retest. And yeah, we didn't get those here. Just smash through these. And then if you add like the RSI divergence at that same moment in time, you see like super high values, then bearishly diverging, then you add more and more stuff into your confluence with all those signals that this is not sustainable, that we won't see an all-time high from here, that we will have a retracement for many reasons. It's not only the 4 hour, also the daily, weekly, and monthly were aligning to fuck off here. That's why I shorted it and came back after such a long period, you know. So this gives like super confluential